Good day, ladies and gentlemen. I hope you are doing well. Today is July 4, 2020, and I'm going to cover gold, gold miners, and dollar index. Let's have a look at 5-hour August gold futures chart. Gold's price action was in line with our forecast. Please refer to June 28 video. During this week, yellow metal advanced as high as $1,807. Failed to follow through, sold off to 1766, and finally closed at $1,787, adding a tiny 0.4% on a weekly basis. As it is coming back to retest the triangle, which it broke upside on June 19, I don't expect gold to move back up very quickly. Gold needs more time to consolidate and gain confidence over the coming weeks before it starts another advance towards $1,800 level. Presently, gold is inflicting pain on those who bought into a fake breakout rally above 1800 and forcing them either to close positions or watch how their losses grow. Therefore, I expect gold to remain under pressure over the next week and grind lower towards $1,735, $1,755 level. But once gold completes the present cycle down over the coming weeks, I believe it has very good chances to test 1800 level with more confidence by the second half of the summer. Let's have a quick look at GDX. I notice a very interesting price action in gold miners. Despite a tiny 0.4% advance in gold price, GDX added 2.8% on a weekly basis. It looks like that gold miners do not believe in a longer term and deeper decline in gold price, therefore holding up very confidently. Primary support comes at $31.5, $32, resistance at $39, $40. Once gold bottoms in the present cycle and starts to rise, GDX has very good chances to advance towards $39, $40 level. But for the next week, expect GDX to trade within $34, $37 range. Now let's move on to the dollar index. As you can see, index has been trading in the rising channel formation for a little over 2 years. Support in blue color and resistance in red color has been successfully tested several times since 2011. But from March 2020, price action became disorderly as index made a false breakdown and a false breakout when COVID-19 panic hit global markets. After panic in markets settled down, the dollar index moved back into the rising channel formation. However, in the beginning of June, it started to break down the primary support line, and since then remained under the blue support line. It is first time since 2018 when the index violated its primary support and remained below for more than 4 weeks. Let's zoom in into a 5-hour chart. As you can see, after a surge in March, the index gave back most of its gain and started to consolidate within a triangle-shaped formation. In May, dollar broke down the support line, successfully retested, and extended decline to $96. If the index fails to overcome primary rising support trend line, we can calculate next price target for the dollar. If we apply the amplitude of the March decline to the apex of the triangle, we arrive at $94.5 price target, which corresponds to the previous low in March. This is it for today. Thank you very much for listening and wishing you a nice weekend. If you found this video useful, please like and subscribe. Also, please note that this video is not an investment advice and created solely for educational purposes. You could find more information about my work and analysis in the link under the description below.